We have talked a lot about how so many people have these cheap mortgages and the lock-in effect of that, and the fact that they are extremely unlikely to experience any significant financial distress that would motivate them to sell their house because the house they have now is way too good a deal to sell. So you've got that lock-in effect of tens and tens of millions, almost the entire housing stock is experiencing the lock-in effect. So where will the inventory come from? Well, I'll tell you one group it's definitely not going to come from. And if you're watching on video, you see this on the screen, and that is all of the people that do not have any mortgage at all. That's approximately 40% of all US homeowners. And think about it. Some of this is because those people got their mortgage in the 90s, right? It's been 30 years already, folks. I mean, it's been 30 years. You know, I have friends that were born in 1991, 1992, 1993, 1995. And that means that was the time when people took out a mortgage because there were some rate drops during that time. And now those people are just paying off their mortgage. Maybe they've got a 15-year mortgage at the time and they paid off that mortgage a long time ago. So suffice it to say, we've got all of these people that own their homes free and clear, and it's very easy for them to just stay put, be comfortable. And this is now this article that I'm showing you, share of mortgage-free homeowners hits an all-time high just last year. People age 65 and older own the largest share of homes in the United States, according to a Bloomberg analysis of census data. And guess what? About 40% of those people are free and clear with no mortgage at all. The rest of them have very, very cheap mortgages. So this is pushing us into, number one, it is massively increasing the wealth gap, but it's also pushing us into this sort of two-class society where you've got all of these homeowners that are in very, very good shape that are now running so much faster in the socioeconomic race than the people who were left out. Now, some of the reasons they were left out is just because of plain economics and this concentration of wealth, which again is a terrible thing for society. It does not bode well for the future, because I believe, at least, that an important thing for stability is a very large middle class. But really, this is the largest share of the people in the country, right? We've got something like, 90 million or something like that owner-occupied housing units, right? About 90 million of those. Then we've got, another 20, 30 million, I don't know, that number keeps going up, of rental occupied households, but those are owners that own them, right? Mom and pop owners. Then we've got the institutional investors that add more to the mix that are not becoming nearly as big a deal as people think, because they got to buy an awful lot of homes to own America, as people are scared of that and the fear mongers are out there. But hey, look, they're a bigger share than they've ever been. So we've got all of these factors in play. And, I kind of said, well, this is increasing the wealth gap. But again, this is a giant section of the economy in a country with just over 330 million people. And obviously that includes children, right? So when you take out the kids, I don't have that exact number off the top of my head, and you look at only the adults, especially the adults 25 to 64 years old, right? That segment, that demographic cohort, is largely homeowners. So again, I don't know if you can say that this is such a bad thing, because the vast majority of people are quite comfortable and they are winning the economic race. Now, what's interesting about it is that you look at the high-end homes and you look at the affluent areas, and the rich are also getting richer. So this article says housing inventory plummets in the most affluent U.S. zip codes. So here, these are cyclical markets, right? and they're doing surprisingly well. There are a few exceptions, of course, San Francisco. And by the way, I got something really interesting to tell you about San Francisco. The beautiful, well, formerly beautiful City by the Bay in just a moment. So I'll get to that in just a moment. Really scary article that I'm about to show you. Okay. So here it says, as the US market across the nation is cooling with record low inventory. So again, that's when they say cooling, what do they mean? They don't mean prices. They mean transaction volume, sales volume cooling. But these luxury markets are experiencing a massive inventory shortage, just like the entry-level market where there's just so little inventory that it is really, really propping up prices. So take a look at these expensive zip codes in Miami, Florida, Watermill, New York, Beverly Hills, California, East Hampton, New York, and my former hometown, Newport Beach, California, right? Look at the days on the market year over year difference and look at the inventory difference. I mean, it is staggering to see this, how these markets are experiencing very quick sales and very low inventory levels with high buyer demand. Now, a long time ago, I told you, when these rates go up, people will be shocked at first and sales volume will decline at first, and sales volume continues to be low. But is that a result of buyer demand or low inventory? Well, mostly it's a result of low inventory, right? So we have these factors going on. But the other thing I said at the time is I said that it will take a while, but buyers will simply learn to accept less. They will capitulate. They will finally realize, hey, as Yogi Berra once said, the future ain't what it used to be, right? That funny saying. And they just can't get what they could have gotten before. So they will curtail their expectations, right? They will augment their expectations downward, and they will simply take off the rose-colored glasses and realize that we have what we have, we can get what we can get, we can afford what we can afford, and life has to go on. So we've got to do something. So we're just going to buy a house. Yeah, it's not as good as it would have been a couple of years ago, and it's certainly not as good as it would have been 5 years ago or 10 years ago or whatever, right? But they're just going to accept reality. It takes a while for people to come around, but we are seeing clear evidence of that happening. People are accepting reality, and they are coming around, and they are buying properties, and that is keeping up. The demand is keeping up with the slightly increased supply. Again, supply is still very low, inventory shortage still very significant, but we have had, as is typical this time of year, a little more supply on the market. Okay, back to San Francisco, then we'll get to today's episode. Crime in San Francisco, we all know this has been a terrible problem. We know that the formerly beautiful City by the Bay, right? You know, I think of the band Journey. I think of that song, My City by the Bay, the Journey song. And we had a Journey tribute band play at one of our live events or at one of our conferences. So we always get a band and make it real fun. But this time we're going on a cruise, folks. That's our next event coming up in April. So be sure to go to Empowered Investor Live and join us for our upcoming cruise. We look forward to seeing you there. That's going to be 5 days together. We're going to have a blast, but we're going to learn a lot. We got 2 sea days where we're going to use those for education and fun as well. It's going to be great. But the City by the Bay now has pirates in the bay. Yes, the criminals have taken to the water. There is literally piracy going on in San Francisco Bay. I don't mean piracy like copyright infringement. I mean theft. People boarding other boats and other yachts and stealing from those yachts. Look at this article. Oakland, California. The former harbor master of Oakland says that he hasn't seen this in like forever. Right? They haven't seen this kind of crime spree ever. People are anchoring in the harbor, and they are taking small boats, inflatables, and they are using those stolen boats to commit crimes and steal from other boats. Folks, it's probably, as scary as this is, only a matter of time before we see news articles about armed robbery in the San Francisco Bay. I mean, this is just really just awful. I mean, it's just awful. And this is the other thing that you've got to realize is that in all of these left-leaning jurisdictions where you see these, we've told you for 20 years, I've been telling you, right? Invest in landlord-friendly markets, right? That have right-leaning politics, because you're going to be much better off in those markets that are friendly to your cause as the investor, right? If you have a tenant that decides they just don't want to pay you, you can get them out, you can get your property back where private property rights are respected. But in these left-leaning markets, you have legitimate political risk. And that is astonishing for me to say that in any jurisdiction within the United States. I mean, probably people haven't thought that there would be legitimate political risk in any United States metro area for decades, maybe over 100 years. No one has thought that in a country with such good rule of law as the US. But now, and you saw that with the BLM riot in the summer of George Floyd, you saw how these, mostly peaceful protests where the, behind the news reporter saying that the city is up in flames, Minneapolis, whatever, right? All of them, you know the story, okay? You have legitimate political risk in some markets. So that means more than ever that you need a partner that can help you make good decisions and give you good advice on your investment markets. So go to jasonhartman.com for help on that. Join us for our Empowered Investor Cruise coming up next year. Sign up for that today at empoweredinvestorlive.com. And just a reminder, for those Empowered Investor Pro members, our monthly Zoom meeting is tomorrow night. We've got a great talk about insurance for landlords that can insure against tenant damage. This is a really interesting and very, very inexpensive new insurance policy option. So you're really not going to want to miss this. If you're not a member, go to empoweredinvestor.com and sign up for that so we can see you on our monthly Zoom meetings.